I think of Recruitonomics as the combination of labor economics on the one hand, my profession, and recruiting tactics on the other. So that means looking at employment trends and wages and quit rates on the one hand, but then combining that with insights, boots on the ground insights on how to improve your apply flow, how to optimize your job seeker experience, all the recruiting tactics that are so important for recruitment marketers. So the bottom line up front, that's a term, that's a military term that I want to get to in this Recruitonomics section. The summary for 2021 in one sentence is, it was one of the most challenging years for recruiters in recent history. So let's dive into the data and explain why it was so challenging using the prism of Recruitonomics. Let's look at cost per click. This chart here shows you the monthly cost per click. That's the cost it is to buy a single click on a job ad, and how it skyrocketed in 2021. And I don't use that verb lightly. I think it truly skyrocketed, an increase of 54% in 2021. Now in 2020, so this chart here shows you data for 2 years, from 2020 through 2021. And in 2020, the year before last, CPC costs rose. They rose by 11%, but then they soared 54% last year. And a big part of this presentation is diving into why that happened. Sneak peek, the incredible demand for workers had a lot to do with it. But this metric, this cost per click metric, rose from late 2020, where it was around 71 cents per click, to $1.10 per click at the end of 2021. From 70 cents to $1.10. And so that trajectory is something I know a lot of recruitment marketers have had to wrestle with in terms of their budgets and their strategy. And so I'm going to dive deep into why CPC costs rose so much. But a click is just one part of the application process, right? Another part of it is whether, once the click is made, the job seeker submits an application. And so that's approximated by apply rates. Now, apply rates rose slightly. The typical apply rate rose slightly in 2021, but it was basically flat. Now, again, what's an apply rate? It's the percentage of job seekers who actually translate a click into an application. And it's relatively consistently between 3 and 4% over the last 2 years. So I would say a fair description is, yes, apply rates rose, which is a good thing, right? It's good to have more job seekers who click on a job ad, convert that into an application, but it just rose barely. So the combination of skyrocketing CPC cost on the one hand and relatively consistent or a little improvement in apply rates, that means CPA cost, this is cost per application, still rose a lot. Not as much as CPC, but the CPA cost, the cost per application in 2021 rose 43%. And you see a big spike there at the end of the year. We're trying to smooth out these trends. So all these percentages I'm telling you are the fourth quarter, Q4 of 2021 compared to the fourth quarter of 2020. That's what these percentages are. And that spike in December is something we're definitely going to dive into. So that's the bottom line up front. Recruiting costs soared in 2021, but why? That's the big question.